GKFX presents the Market Analysis Webinar.
Hi everyone, thank you very much for attending another edition of our weekly webinar series. Great for you to be here. There's another big week of trading coming up. We've only got 4 days to squeeze it into this week because of the Easter holiday. Meant Monday was a bit of a write-off in terms of trading volumes. And so now on Tuesday, we're looking forward to the rest of the week and some good opportunities. As usual, we're going to be covering the Forex markets and then switching gears to commodities and as well as taking a look at the equity markets. If you have any questions or comments, please make sure to post them on the video. We're really happy to hear from them. And of course, if you are enjoying and liking these videos, please make sure to subscribe wherever you might be watching this, be it YouTube or some other social media channel. Subscribe to the channel and we'll keep pushing these out. Now let's start with the euro-dollar currency pair. Okay, let's remind ourselves of the big picture. It's a bit of a chop. We're in a giant range between 106.50 and 114 to 114.50. We're trying to decide which way we're going. Now at the moment, we're making a little bit more bullish progress. We had a couple of big down weeks, a recovery week, a big down week which didn't go all the way down to the lows again, a little small recovery week, and we're just into the new week here and we haven't done much yet. But what you can sort of see is that the volatility is coming down, so we're sort of narrowing into a sort of triangle-like pattern, if you like. And so we've had the big volatility, the range of the trading bars is coming in, and so volatility is narrowing. And what we're doing at the moment is we're trying to trade within that narrowing trading range on a shorter term basis, but we're also keeping a big eye on when that big breakout could come, because that's always the pattern, is that you have that narrowing volatility that sees the volatility drop. It's still elevated by normal standards, but we're sort of going sideways and in, and then we're looking for the big break one way or the other to tell us whether this trend, this long-term trend that we're looking at here, is reversing or continuing for a move below that 106.50 support. Now you can see the progress that we're making here on the 4-hour chart. We had this level in last week around the 108 mark, and you can see how we were basically saying that the move into oversold territory was a warning sign that this down move could be coming to an end. But our general standpoint was, well, while we're below that 108, we'll assume that downtrend reverses. Actually, it pretty quickly reversed at the end of last week, and you see we pushed up to that prior low that we'd highlighted, came down from there, retested that pivot area again, pushed higher to an old area of low, which I think we had a couple of weeks ago as the neckline from our head and shoulders pattern, which was left shoulder, head, right shoulder, breakdown. We said that this actually, it was another thing we suggested why the trend might be over, this downtrend, was that this projection of the distance of the head had pretty much been met. And so, you know, that is how things have worked out. We've pushed back up to the neckline, and that's where we find ourselves, in a fairly tight range between 109 and basically 109, what should we say, 40 as the neckline. My bias here is that we do actually get a push to the top side. We've not reached overbought territory yet. It's a fairly meandering, undecisive uptrend that we're in. And so this neckline could ultimately prove to be the top of this little push higher to the top side here, but I tend to think it's probably not. As I said, I think we're in a kind of triangle pattern. Something like, I'm not drawing these trend lines in, but I think we can push a bit higher to the top side, perhaps to just short of 1050, and this previous peak here, which was also this peak here, is also these lows over here, this kind of zone, and then maybe roll over from this trend. And still, we haven't got our decisive long-term breakout, but that potentially is the way I'd be playing things here, looking for a breakout through the neckline to confirm an upside bias to test the 101.5, the 110.5, and then look for the prices quite possibly to roll over from there. Obviously, if we get a close above there, then we keep looking towards these previous peaks and potentially this big breakdown area up here. For the moment, we're still in our trading range. We haven't had that big decisive action to take us one way or the other out of this narrowing trading range. Now let's look at the British pound. This is our short-term trading chart. Let's look at the long-term picture. Similar situation with, obviously this is all very dollar driven. So we're looking at a couple of massive down weeks, down to 35-year lows, in fact, at 115. We've had the recovery week, a couple of narrow range weeks, and actually decisively at the start of this new week, we've pushed up beyond this 125 level. That takes us to the highest in a month in this cable currency pair. So this is pivotal. If we can sustain 125, well, we're looking at a push up to 127 in my opinion, and I think that is the most likely situation. But if we get a failure at 125, to me it suggests we retest these lows and we could be looking at another 1,000-point drop or something in that vicinity. So when you get these breakout points like this, perhaps easier seen on the 4-hour chart, this was our low, which we came up and we formed this resistance here, false breakout through the lows down here. We've actually broken to the top side, and after that failed breakout here, again we've sort of shifted into range trading, but the pound is more positively trending than others. If we get a move back below this 125 level, to me tells me we're back down to these lows, because it's another false breakout, this time to the top side. This one was a false breakout to the bottom side. But what I suspect happens is that we can continue to meander higher up to 127. The trend for the moment is higher. We just have to watch out with the fact that we've hit this oversold level. And a bit like the euro, this trend higher in the pound has been pretty consistent, but it's been nothing along these lines. Not been a really assertive up move. It's been a bit more meandering. Doesn't have to, that in itself doesn't call the end of a trend, but it just says there's a little less momentum behind it, and there's a potential that this sort of upward surge just rolls over overbought levels and we come back down into the trading range again. So a bullish bias, but 125, a big key level here. If we hold 125, we're looking at 127. If we don't, we're looking back down at 122 and change, and potentially a big run down towards 115 again, if that 122 level gives out. Dollar yen, in a way, it looks like the reverse of the other charts. That's natural because obviously the dollar is the numerator this time instead of the denominator. What we can see here is that we had a big drop, put in a double bottom pattern. In theory, the double bottom should have, and the move through the moving average again. So at this stage up here, price was above the moving average. It broken through this neckline through here, so things were looking bullish, but it just meandered, and eventually we came back through the neckline again, and we're back and testing the bottom of the trading range, a bit like what we were just discussing is a possibility in the pound. Now we've hit the oversold levels, but the fact that we had this this false break to the top side, it tells us one of two things. There's not much upward momentum, but it also tells us there's no great desire for a trend. So one of two things happens here is that we get another maybe attempted false break and we move back into the range again. It tells us we're in a sideways market, or actually this was just a sign of there's not much bullish momentum in the dollar, and actually the yen is going to continue to appreciate, and this was the foreshadowing of a break of this support and a move back down to these previous support levels. First of which I would say is about 106, which was this spike high back here, and then it's 105. And again, we can remind ourselves of the kind of range-bound nature that we've been in this market, but this 105 has been pretty big because of these lows over here. A move through 105, we'll deal with that when we come to it. It's not clear we're getting to that yet, but a move through 105, in my judgment at this stage, would mean a retest of these spike lows and potentially a breakout of this big trading range that we've been in. Now looking at the Aussie's been one of the best performing currencies of late. Remember, it's a proxy for what's going on in China. China reopened after the coronavirus outbreak, even the city of Wuhan seeing some easing of the lockdown restrictions. People are travelling out of there en masse. And so Australia doing well alongside China. Remember, it's China Q1 GDP this week. That's out on Friday. So Aussie 10 could well be a mover on that. That's similar to we discussed in the week ahead video this week. Now, technically a big strong trend, but we've run into this area of support that we'd highlighted in the past. Basically this low here with 64.50 as a sort of round number through these pre-lows, lows, and then kind of discounting this spike, although you can see that it sort of affected the move, this little consolidation over here. But basically we had the A, the kind of the B correction, and the big meets C move up. So is that it? Are we rolling over from here? It's distinctly possible. Just look at the several moves into overbought territory, and now we're coming out of it. So a few things lining up here as a potential top, but we haven't really got the confirmation yet. We want to see a bigger drop, take out this consolidation lows through here probably, and an attempted rally back to the top side and a failed move to the top side on second test is really the ideal situation. Doesn't always have to work out like that, and if we start seeing the bearish momentum pick up, look for bounces to sell into. For the moment, the trend is higher. My tendency would to think that it's probably come to an end, but I won't be trading on that until we get that kind of more like a top confirmation. If the top is in, then we're looking at a re-challenge of these 62s, and then maybe maybe the 62 can act as support, and we'll get a push back to the top side again. At the moment, we're looking a little bit top heavy, potentially looking at a bigger pullback, but as I say, the trend is still higher. And if we can continue above this this little peak here, then it would make sense to me. If I remind you, from the top side, we had this big spike low in the Aussie. It was like a flash crash in the Aussie, and that will be our next target to the top side. And then ultimately 67, which is where we saw this big breakdown and that real capitulation sell-off in the Aussie, which potentially told us there was a long-term bottom in. But again, we haven't had much retesting of the lows. A bit like the stock market that we'll see in a minute, we've kind of rallied pretty strongly off the lows without a retest, which has a few people scratching their heads wondering when that retest will happen, if indeed it ever does. Okay, now we're looking at the dollar CAD. Similar picture of dollar weakness that we saw against the yen, but it's through the lows. But one interesting thing to note here is that we've had several tests of the 30 oversold level, and we've moved through the lows, but we've not really been able to push decisively into oversold territory, which is not really characteristic of a strong downtrend. So it suggests to me that there's a possibility here that we actually, this ends up being a little false break. We hold on to these long-term lows, which, if I remind you, was the 137 area, this peak back here, this peak through here, had the big push out, and then if you remember, there's our longer term resistance, which has affected prices again, and we've seen a natural pullback from there, but for the time being 137 is holding, and I think that's natural, and maybe we don't even get to 137 this zone. Maybe the current area fails to see any more downside momentum. 30 holds for a third time, 1, 2, 3, and we get a push out through the moving average, and I think 140 will just be the level to look at. If you're buying now, you're going against the short-term downtrend. You may be a little bit early. If you wait for the confirmation above 40, maybe you try and buy into the top of the bounce, but there's more chance that the uptrend is coming at those levels. So matter of how you time this, but it sort of looks like the dollar CAD pair might be about to stage a recovery. This may all rest on oil prices, and we'll have a look at oil in just a minute. So before we do get to oil, let's first have a look at gold, which is one of the more interesting markets, because we're at a 7-year high here in gold. We're above this critical 1700 level. This is a weekly chart, as you probably have guessed. We held the support down here on the big correction. We obviously had a strong rally off the lows. The question was, was that a dead cat bounce, and were we hitting new lows again? It was a good assumption that it probably would be after a decline like that, but we pulled back and we pretty much held on to this this consolidation area through, what's the best way, that's just true, these series of highs through here, pretty much held on to that kind of zone of support through here, all kind of worked, and now we're back up through those interim highs, held as support at 1640, rallied up through resistance, and now given the level of momentum here and the potential for another failed breakout at 1700, what we really want to see is 1700 hold. If 1700 gives way so quickly, it's a sign that we're topping again, and we could see a quick rollover in gold. But if 17 can just hold on, then naturally I'd be targeting 1750 and 1800, the next round numbers on the top side, as future targets for gold. And bear in mind, on this weekly, this is a daily chart, we've not pushed into the 70 overbought area yet. Here's our 4-hour chart, and you can see in a bit more clarity how nicely this resistance zone has worked out. Pulled back down to the 1640 previous area, and then consolidated, broke to the top side, which I believe is along the lines of what we said last week. We maintained our bullish bias, and we're looking for the top side break to 1700. We've got there. Now we're above 1700, so there it is. Short consolidation above there at the moment. Wouldn't be a surprise to see a little false breakthrough there, maybe back down to this consolidation area here. That would give you a chance to rejoin the party. If the market is very strong though, you won't even get back down to 1700. The bulls will just be piling in above these levels. So let's see how this price action works out. Obviously we've been trending higher for a little while now. There's a chance of a snap lower, but the trend is very much up, so I think that's the way to be viewing things, is that we've had a big breakout to multi-year highs. That's a bullish phenomenon, it's not a bearish one. And so I mentioned oil when we were trading the CAD. Oil, interesting here, so this is the 4-hour chart. Here is us trying to find a base, basically at 20, but 21 you could see is where it's been tested 3 times. And you can see 28.50 thereabouts was where we currently stand, in fact, almost exactly on it, and it's where this previous spike was. So tells us pretty much what we need to know is that we had the break to the top side, then we had this OPEC meeting scheduled, OPEC plus rather, which includes Russia, and then we had a G20 energy meeting, which includes lots of other countries, most importantly the United States. And they've all agreed to cut output by about 10 million barrels per day. That's about 10% of global output on oil. But if you think about it, industry has been pretty much ground to a halt during the coronavirus lockdown. So actually, demand is probably significantly more down than 10%, which is what they've got the supply. So if you're thinking about the price as a kind of supply-demand balance, you would suggest that probably supply is still overwhelming demand right now. And so that being the case, that's a kind of weight on oil prices. So prices, they've made that decision, prices consolidating. If we do turn lower back into this range again, that's obviously oil prices weakening. Normally, that's a bad thing for the Canadian dollar. So just bear that in mind. I'm not putting a massive amount of stock in this. This was more to demonstrate some bullish divergence when we were down at these lows before. But we will notice that this RSI trend line has broken. So certainly a sign that the bullish momentum is not fully there. A chance that we tip down into the trading range again. I tend to think that probably we've put in a base at 20, but maybe we dip down into 25 again and have to hold that level before we can finally push up towards 35, which was my base case last week, was that we got that push up to 35. Obviously it didn't quite happen. We had that breakout to the top side, which just failed around 32 and rolled back into the range again. And here we find ourselves. So look at this, look at a break, trade this range if you like that kind of thing, but otherwise we're looking for a break either side of this yellow area to the top side of the bottom. Okay, last but not least, the stock market. A bit too many lines on this chart for my liking, but it's just kind of telling a story where this was the big downtrend bear market. Then we started to stabilize. We got a break through the high, but we came straight back. It was a bit of a false break, but we held the lows. Same thing again here. We made a new high, but the correction was deep. And then we started to find our feet a little bit on this low through here. You can, oh, come on, play with me here, MT4. This is when things started to look a bit more stable. We held on to this low more decisively, and then we went up and broke this highs. And then what was really good in terms of the kind of bullish cause is that we held on to these highs here. So the resistance became support, and we pushed up to the top side. And if I just remind you, from a weekly basis, we'd been eyeing up these lows. And you can see what's particularly nice this week is we had a drop down, tested this area of, you could say it was support, and it was resistance. We broke the resistance, tested it again as support. It was the low this week so far, and we're pushing again up to the top side, which to me suggests maybe we ultimately come up to test this resistance zone up here, which I believe is 2900. 2950 actually, thereabouts, with some interim resistance in the meantime, which was just these previous peaks. So it looks bullish for the moment. A drop through, I think we stayed bullish above 2700, a move through 2700 suddenly has start us worrying about a trend reversal to the downside, and that's when we turn a bit more cautious. Okay, fantastic. That's all we have for this week. That's 8 markets covered. Again, if there's some extra markets you'd like us to cover, please drop a comment. Anything you have to say about the videos, happy to incorporate them moving forward. Good luck with trading this week, everyone. Talk to you at the same time next week.